We're going to go ahead and trade it. So let's take a look at that. And we have Tim Bigham with us, option strategist at Pilot AI. Good morning to you, Tim.
Good morning, Nicole. So yeah, looking at Oracle, this is a stock that certainly has come off, the highs fairly sharply, kind of along with the rest of the market here. Valuations, as you alluded to, at historic extremes, but most stocks valuations are at or near historic highs as well, so doesn't differ from many of the other AI-related stocks in that manner. So it'll be interesting to see how the stock reacts with earnings. They'll probably come out, in my opinion, and have a slight beat similar to all the previous ones, the Nvidias of the world, if you will. But the stock reaction, I think, may be a little less muted. And here I'm kind of, because of the recent pullback, slightly bullish here, more capturing implied volatility on this trade, selling this week's out of the money 255 calls, buying next week's 255 calls, paying under $1 for that trade. So like the risk on that trade. More importantly, selling about 125 IV, hedging by buying a 75 IV. We know post-earnings, when the unknown becomes known, that term structure vol will flatten here, which is a nice edge. And I think, given the fact that the market's waiting on the Fed here, I think stocks will pretty much be on hold here going forward, and Oracle being one of those. So market makers implying about a 9% move on earnings. I think it will remain between that upper and lower boundary and below that kind of 260 resistance level near those recent highs.
All right. Thank you for that. So we'll watch for that today. We'll have that for you here on the network. How about just your big picture thoughts on the market? We've already had some back and forth action this morning. How are you feeling?
Yeah, I think what you were talking about in the previous segment, where the spending for AI, right, the CapEx, will that be justified or not? And certainly Oracle representing one of those names in a big way. But the Microsofts of the world, how much they have to spend, Meta and the like, to kind of build out this AI, the big kind of hyperscalers, those big data centers, the amount of energy required on that. Will that be able to be monetized or not is the really trillion-dollar question. Difficult for me to see at the end of the day how all of this plays out for everyone. I think you'll have some winners, but a lot more losers here, as everyone's in this kind of, if you will, gold rush to get into the AI game. We usually know how that ends, and I think the market is probably due for a pullback here. We really haven't had any meaningful pullback since those Liberation Day lows.
So, on a pullback, would you then consider buying? What kind of sectors maybe seem to be winners to you going forward, or even names? I mean, I don't know if you name names, but...
Yeah, absolutely. The beaten down names, the kind of ones that have felt the wrath, if you will, of AI. I'm looking at stocks, for example, like Adobe, which has been beaten up because it's lagging in the AI game. Valuations are becoming very attractive. They're trading at decade lows, right? Whereas most other stocks like Oracle, decade highs here. So I think this rotation out of these hyper growth names into some of the more heavy value names will probably occur, and especially with the 10-year yield around 4%, we may get those rate cuts, but it might be for the wrong reason, right? It might be because growth is slowing. So I think it's a place where you may want to at least move somewhat into the lower beta, lower valuation names, and maybe pay a little bit of a divvy as well and kind of lean on that for the next several months.
All right, Tim Bigham, option strategist, Pilot AI. Great to see you, Tim. Thank you.